Hey everyone, welcome back for another deep dive.
Yeah.
Today we're going to be looking at the world of Indian finance,
Okay.
specifically the Nifty 50,
All right.
and whether or not you are someone who follows global markets or you're just curious about India's economic rise. This is definitely the deep dive for you. We're going to be going behind the scenes of this particular stock market index, using as our guide the NSE's own 25th anniversary publication.
Oh, cool.
So to kick things off, for anyone who might not be familiar with the Nifty 50, it is India's flagship stock market index,
Yeah.
kind of like the Dow Jones here in the U.S.
Right.
And basically it tracks the performance of 50 of the largest and most actively traded companies on the National Stock Exchange of India.
It's been around for a while now.
Yeah.
It was launched back in 1995. And the goal was to kind of create a stock of the nation. So a benchmark that really captured the pulse of the Indian economy.
The pulse of the Indian economy.
Exactly.
I like that.
And looking at how its influence has grown, I think it's safe to say that it's achieved that.
Yeah, I would say so.
Yeah.
The numbers back that up.
Yeah.
When it first started back in 95, it represented a little over 33% of the total market value of actively traded companies. Now that figure is a whopping 53%.
That's a huge jump.
Huge.
It really shows how these 50 companies, they haven't only just grown individually,
Right.
but they've become even more representative of the market overall.
Yeah.
And it's not just about which companies are included, but also how they're weighted within the index.
Right.
So in 2009, they switched to a free float methodology.
Free float methodology.
Yeah.
It sounds a little technical.
It is a little technical, but I can break it down.
Yeah, please.
So basically what it means is that the weighting is based on the proportion of shares that are actually available for trading on the market,
Okay.
rather than the company's total share count.
So it's a more accurate picture of
Yeah,
what's
yeah.
really happening in the market.
Exactly. It helps prevent manipulation and ensures that the index is a truly reliable reflection of market dynamics.
Makes sense. And one of the things that I thought was really fascinating when looking through all this is how much the composition of the Nifty 50 has changed over the years.
Yeah.
It's almost like a time capsule of India's economic transformation.
Absolutely. If you look at the sectors that dominate the index today versus back in 1995, it tells a powerful story. For example, back then, the IT sector was practically non-existent in the Nifty 50.
Yeah, India's tech boom was just getting started right around that time.
Exactly. But fast forward to today, and the IT sector makes up nearly 18% of the index.
Wow.
It's a testament to India's rise as a global tech powerhouse driven by its skilled workforce and government initiatives.
That is really incredible to see how that sector has just exploded. On the flip side, we see that sectors like consumer goods and metals, which were very prominent back in 95, they've shrunk considerably.
Right.
Why is that?
Well, for consumer goods, it likely reflects changing consumption patterns.
Okay.
As India's middle class grows and their purchasing power increases, they're demanding different types of products and services.
Makes sense.
As for metals, it could be tied to a shift away from heavy industries towards sectors like technology, or even a change in global demand for certain metals.
Yeah, that makes sense. It's really fascinating to see how those economic forces play out in the makeup of the index. It's not just about these abstract numbers.
Yeah,
They reflect real changes in how people live and work.
exactly.
And speaking of companies that have witnessed those changes firsthand,
Yes.
did you know that there are 12 companies that have been a part of the Nifty 50 since its inception?
Yeah.
That's incredible.
Yeah.
What companies are we talking about?
Well, household names, really. So Reliance Industries, HDFC Bank, Tata Motors. Their enduring presence says a lot about their stability and the significance of their sectors within the Indian economy.
Yeah, it really does.
Uh-huh.
They've really stood the test of time.
They have.
That's really something. It's amazing to think about them, being there from the very beginning and navigating all the ups and downs of the market.
Oh, yeah.
Speaking of which, let's actually talk about how the Nifty 50 has performed over these past 25 years.
Okay.
Paint us a picture.
Well, the overall picture is one of remarkable growth.
Okay.
Since 1999, the Nifty 50 has delivered a compound annual growth rate, or CAGR, of 14.2%.
Wow, 14.2%. That's incredible.
Yeah, it's pretty impressive.
Yeah, it really highlights India's growth story.
It does.
But I imagine it hasn't always been a smooth ride.
Oh, of course not.
There have been some bumps along the way.
Absolutely. No market is immune to volatility.
Right.
We've seen global events like the dot-com bubble burst
Right.
and the 2008 financial crisis,
Yeah.
both of which had an impact on the Nifty 50.
So how did the index weather those storms?
Well, it definitely experienced dips and corrections during those periods.
Yeah.
But the key takeaway, I think, is its resilience.
Okay.
Even when faced with these, global challenges, the Nifty 50 has consistently bounced back and continued its upward trajectory. Which brings us to, I think, a very interesting trend. The rise of passive investing in India. Passive investing.
Yes.
That's something that I've been hearing a lot about lately.
Yeah.
So for those who aren't familiar, can you explain what that is?
Sure. It's essentially an investment strategy that aims to match the market's performance rather than trying to beat it.
Okay.
And the Nifty 50 has become the go-to benchmark for a lot of passive investment tools, particularly ETFs and index funds.
ETFs, index funds, break those down for us.
Okay, so think of them as baskets of stocks that you can buy and sell as a single unit.
Okay.
They're designed to track a specific index, like the Nifty 50,
Right.
offering a simple and cost-effective way to diversify your investments.
So instead of picking individual stocks, you're basically betting on the overall performance of the index.
Exactly.
Yeah.
And it's a way to capture the market's growth without having to actively manage your portfolio.
It sounds like this is an approach that's gaining serious traction in India.
It is. The total assets under management in Nifty 50-based ETFs has skyrocketed to over Rs 163,287 crore.
Wow.
Which is roughly equivalent to over 20 billion US dollars.
Oh, wow. This indicates a growing preference among Indian investors for this simpler, diversified way of participating in India's growth.
It's really incredible to see how the Nifty 50 has become so central to the investment landscape. But did you know that its influence goes even beyond India's borders?
It does.
Really?
Yeah. Major global investment firms like iShares and Xtrackers offer ETFs based on the Nifty 50.
So even international investors are using this as a way to kind of tap into India's potential.
Exactly. It's become a recognized way for them to gain exposure to India's growing economy.
Yeah.
It's almost like a seal of approval on a global stage.
It really speaks volumes about the Nifty 50's credibility
Right.
and its appeal as this global investment opportunity.
Right. Absolutely.
But looking ahead, what does the future hold for the Nifty 50?
That's a good question.
Especially considering that India is, predicted to continue its impressive growth trajectory.
Right.
How do you think the index's sector composition might evolve?
That's fascinating to think about.
Will IT maintain its dominance, or will we see new sectors emerge as major players?
Well, India is rapidly developing new industries like renewable energy,
Right.
fintech, even space exploration.
Yeah.
So it's quite possible that the Nifty 50 of the future will look quite different, reflecting these emerging sectors and innovations.
So for investors, this evolution raises some key questions.
Yeah.
How will these shifts impact returns?
Right.
Which sectors will offer the most promising growth?
Yeah.
And how can they position themselves to benefit from these trends?
It's a lot to consider, for sure.
Absolutely.
It all comes back to that idea of Nifty 50 being the pulse of India's economy.
Yeah.
And just like any pulse, it has its own rhythm, its own fluctuations.
So understanding those nuances is crucial,
It is.
especially for anyone looking to participate in India's growth story.
Precisely.
Yeah.
Whether you're a seasoned investor or just starting to explore the world of finance, paying attention to these trends can make a big difference.
Yeah, it really makes you think about how dynamic the Indian market is and how the Nifty 50 really captures that energy. I mean, the past 25 years have been quite a ride for this index.
They certainly have. Yeah, going from representing a little over a third of the market to over half.
Right.
And it's not just growth, it's a whole shift in India's economic landscape. I have a feeling this is just the beginning.
Yeah, it's like we're witnessing this evolution in real time.
Right.
But for those of us who aren't financial wizards,
Right.
I think it can feel a bit overwhelming trying to keep up with everything.
I understand that. But the beauty of the Nifty 50 is that you don't have to be an expert to participate in its journey. Whether you're dipping your toes into passive investing or just keeping an eye on the market, the Nifty 50 offers this really fascinating window into India's economic momentum.
Yeah, it's like a cheat sheet for understanding where India's headed.
It is.
And for those of us who are endlessly curious, I think it's a reminder that there's always something new to discover, new connections to make.
Absolutely. And as India continues its remarkable growth story, the Nifty 50 will undoubtedly be there evolving and adapting, reflecting the aspirations and innovations of a nation on the move.
So the next time you hear about the Nifty 50, remember it's not just about numbers on a screen. It's a reflection of a vibrant economy, a nation transforming itself.
Yeah.
Maybe it's a glimpse into your own investment journey as well.
Yeah.
Keep exploring, keep learning, and who knows, the next deep dive could be into your own portfolio.
Happy investing, everyone.